Hey there, in this video we're going to be talking about 4 of the most common Forex day trading mistakes. Chances are that if you're just now starting your Forex day trading career, you're making one of these 4 mistakes, and if you are, it's costing you a ton of time, a ton of money, and you're missing out on a lot of consistent profitability as a result of making one or all of these 4 mistakes. I gotta tell you, from my experience, these mistakes can cost people a lot of time. They can cost people a lot of money. When I look back on my career, I made all of these mistakes so many times over before I became consistently profitable. And had I just implemented the other side of this coin, and had I watched a video like this sooner, I would have been a lot further along, a lot faster, and I would have been a lot better for it. But number 1 most common day trading mistake is not exercising risk management. Risk management simply means knowing and calculating and planning exactly how much money or how much as a percentage of your account you're willing to risk on one particular trade. We go on Instagram, we go on YouTube, and we see people having these massive profit days, but oftentimes what we don't think about is how much they might have had to risk to make that amount of money. It's so easy to get drawn and pulled towards those high profit numbers, but the reality is, in order to be consistently profitable, you have to be consistently in control and in management of your risk. So for me and for other full-time professional traders, this means risking a low percentage amount on every single trade. For me, it's anywhere from 1 to 2% of my entire account on any one singular trade. Now, 1 to 2% really isn't much, and the reason for that is because it allows me to remain unemotional. It allows me to be objective in my trades rather than subjective, rather to be guided or pulled in different directions based on how much money I have on the line. When we're risking a lot of money, obviously the potential for reward is that much greater, but oftentimes we'll make emotionally based decisions as a result of risking too much money. Oftentimes for me, a good indication of the fact that I might be risking too much on one particular trade is how I feel when I'm in that trade. Am I fearful of the loss? If I take the loss and I don't win that trade, do I feel bad about it? Like, that tells me my risk management rules were not adhered to. The risk management was not properly in place. This is a mistake that I see everyone make when they first start trading. They try and double, triple, quadruple their account in like the first week that they start, because that's what they think they need to do to get to that next level. But the reality is, consistently profitable, full-time, funded traders, they don't do that stuff. They are consistent in their profit because they're consistent in their plan. They're consistent in their risk management. Because the amount you're willing to risk is, to that degree, is the same degree you're willing to reward, right? You're setting yourself up for success. So that's mistake number 1 that I see all the time: not adhering to any type of strict, consistent, objective risk management rules. For you, it could be a much different percentage than it is for me, but I know that based on my experience and based on what I've seen other traders do, a low risk percentage, say 1, 2, 3% of your account max, is what is needed to be entirely unemotional about your trades. So that's mistake number 1. Mistake number 2, along those similar lines, is trading for a win rate or a pip count rather than for risk to reward and or percentage account growth. You'll see this all the time, especially with online marketing. Different companies or different programs or different gurus will boast about how they have a 75% win rate, or they guarantee 500 pips per week, or so. These crazy deliverables and measurables that, when broken down and taken literally, they actually don't mean a whole lot, because you can actually lose more trades than you win and still end up net positive. The reality is, professional traders, people who do this for a living, care about one thing and one thing only, and it's percentage account growth on a monthly, quarterly, or yearly basis. That's it. percentage account growth. They don't care if someone is funded, if investors are coming to a full-time trader and they're giving him or her money to trade, they do not care how many pips they get. They don't care how many trades they win. All they care is how much money is being netted as a result of their investment. What percentage account growth are those traders seeing? So along those same lines, it's important to follow a trade system and a trading style that is aligned and optimized for risk versus reward, not for pips. You know, who cares about getting 500 pips if your stop loss was 500 pips? That's a one-to-one risk versus reward. So if you're risking 2% or 3%, you're only at most going to make 2% or 3%. And then you have to rely on a win rate, because at that point, you're risking the same amount than you are gaining. So the right trading style, the right trading strategy is going to be one that has a low risk and a high reward. It has trades with a minimum of 1 to 3 plus risk versus reward. And then the absolute monster trades are going to be trades where they have a 1 to 7, 1 to 8, 1 to 9 plus risk versus reward. So you might be risking 2% on, you might have a really small stop loss, but if that trade triggers and hits your take profit, that's a multiple of what? 7, 8, 9, upwards of 9 times 2%, 18% account growth. So with trades like that, you can, again, lose more trades than you win, and oftentimes you will, simply because the stop losses are so tight. You need to have such a tight entry. But at the end of the month or end of the quarter, end of the year, you'll end up net positive as long as you're consistent with your risk and you're consistent with your risk versus reward qualifications to invalidate or validate a trade. So that's mistake number 2, is trading for a win rate, trading for a pip count, not trading for percentage account growth. So if you're interested in learning how to trade and you are tempted to join with someone who boasts about a win rate or pip count per week or per month, run for the hills. Just turn around and go in the opposite direction, because those people do not know what they're talking about. Mistake number 3 that kind of piggybacks on that is not having a trade plan. When I first started trading, I looked for reasons to get into trades because I love the rush. I love the excitement of just getting into a trade. There's that adrenaline rush and that excitement about the potential to make money, right? We're all enthusiastic about that. We all are motivated by that. But the reality is, consistently profitable traders have a trade plan. You would not build a multi-million-dollar house without the blueprints, without the plan to build that house. You wouldn't just show up and start hammering nails into random pieces of wood and start painting random things. You just wouldn't. You would need a plan. You'd need a professional who knows what the plan is ahead of time and then carefully and responsibly adheres to that plan. Trading is no different. So you need to know, what are the qualifications, what are the objective scenarios that you're looking for in price action, in the charts, whatever pair you're looking at. What are those things that you need to see to either invalidate or validate a trade? You need to have all of those qualifications written down in the form of a trade plan, right? So for me, that might be aligned with higher time frame trend, right? Aligned on the 4-hour or daily trend. I'm not taking counter trend trades, and if I do, my trade plan says I drop my risk, because I know that the best trades that have the highest probability of working out in my favor are ones that align with that higher time frame trend. If I'm looking for an entry, I might be looking for an engulfing candle, right? A flag coming back down to that point of interest. I have all these things listed out in my trade plan, and inside of EasyFX Trading, we have templated trade plans that our members are able to copy and download for themselves. So if you'd like examples of that, just simply let me know. I'd be happy to point you in the right direction there. But you need a trade plan. You will not see any type of consistent success with your trading without a plan in place. You need to have a SWOT analysis. You need to know, what are some of the weaknesses that you have? What are some of the mistakes that you're making, and how can you learn from those mistakes, adjust your trade plan accordingly so that you can get better results in the future. Along those same lines, there's plenty of different resources that you can use to beef up your trade plan, and to take that trade plan and then turn it into what is a trade journal, where you log all of your trades. You take screenshots, you take notes of what type of emotional state you were in before you took those trades. You write down the pair, you write down the position size, how much you were risking, what the reward was, what the result was, and you'll find commonalities, common denominators between your winners and your losers. And that's how you form your edge. Find what you are good at, your unique eye, if you will, in the marketplace. So that's mistake number 3, not having a trade plan. Now the fourth and most final mistake that I'm gonna share with you guys today is one that I think everyone who starts trading does not understand right away, and that is this. You need to find the right community, the right environment. You need to stick inside of that environment long enough to actually get good data. And what I mean by that is when people first start trading, they go on Facebook, they go on Instagram, they go on YouTube, and they're like watching 5 different videos on YouTube. They're following 5 different gurus on Instagram. They're buying all their courses. They're jumping from signal service to signal service. They're taking every single trade idea under the sun. They have no type of risk management. They have no type of consistency. They're trading 6 different strategies, and they wonder why they never see any type of success, and then they end up quitting. That is why. They are not sticking with one strategy, with one philosophy, in one environment, and they're not staying in that environment long enough to get conclusive evidence of whether or not that environment is good. So said differently, they're not sticking with one guru or one mentor or one coach long enough to see those types of results. They're bouncing around everywhere, and then they wonder why they're not seeing any type of success. I can relate to this fully. When I first started, I was a part of several different groups. I was a part of a few different signal services. I was watching videos on YouTube of different types of strategies, many of which actually conflicted one another, right? So when I tried to execute all of it at once, I was surprised why I wasn't getting any type of results. It's only when I tuned out the noise, I got rid of the distractions, I focused on getting around people who had what I wanted. So finding a mentor, finding a coach who had what I wanted, who had that proven concept of success, and stuck with him for long enough to actually get results. I would encourage you right now, if you're watching this video, to go out, find people who have what you want, and stick around those people long enough to actually see it through. Trading is not an overnight skill set. It is not a get-rich-quick scheme. It is not something that you can get lucky at consistently forever. It takes work, it takes effort, it takes diligence, and it takes discipline. And if you find someone who has those qualities and has the consistency and the results that you're looking for, cling to him or her with everything that you have and stick with it long enough and never quit. That would be my encouragement to you. If you're watching this video and you want to start learning how to trade, but you have no idea how to start, I hope this video was helpful, and I would obviously encourage you to take action and join our private day trading community at easyfxtrading.com. We have, at the time of my recording this video, just shy of 700 members from all around the world who gather together inside of our private community that's hosted right on Discord. We have copy and paste trade signals, chart markups. We have a whole educational video library. We have recorded calls. We go live multiple times per week with live training, live trading, live education, Q&A, a live chat with our head traders, everything that you need to launch and propel your trading career in the right direction, we have for you right inside of our group at easyfxtrading.com. So if you click below this video in the description, I should have attached a link where you can sign up. We have a few different plan options based on your goals, based on your budget, but we want to make this an opportunity for you to level up, for you to take action, for you to find that environment and stick with it long enough to actually get results. We have hundreds at this point, like dozens and dozens of traders who not only are consistently profitable and self-sufficient, but are actually getting funded on live 6+ figure accounts. They started out, they didn't have a ton of money, but they got consistent with their craft. And with that, they were able to earn the right to trade these larger accounts, to leverage other people's money to trade with our strategy. And it's so rewarding and so fulfilling to see. So I would encourage you, again, click the link somewhere below this video in the description to join easyfxtrading.com. We'd be more than happy to have you. And if you have any questions about it whatsoever, drop a comment below this video as well. So again, that about wraps it up. Those are 4 of the most common Forex day trading mistakes. Number 1, no risk management. Number 2, no trade plan. Actually, that's number 3, no trade plan. Number 2 was not trading for risk to reward and account growth. And then number 4, most importantly, not finding the right environment and then sticking inside of that environment long enough to get consistent results. I hope you found this video valuable. If there's anything I can do to help you, if you have any questions, again, comment below this video. If you found this helpful and you'd like to see more content like this, give this video a thumbs up. Make sure to subscribe to my channel so you don't miss the next video like this, and I'll catch you on the next one. Thanks so much for watching.